Okay. Hi there, everybody. It is 6:15, time to show up. I'm showing up. I'm glad you showed up. I appreciate every single one of you. Do the little YouTube dance, like, comment, subscribe, all that happy horse shit, and let's shit in the box. My mother had surgery today, which has got me a little bit preoccupied, but she's okay. Everything's fine. Okay, it's RSI surgery. She has issues with her hands. We're a computer family. We're a computer family, a government contracting family, and an aerospace family. I have worked in the aerospace industry for years. Both of my parents worked in the aerospace industry for years. My dad was with the Air Force until he retired after about 24 years in, I think it was. And my mother was a manager at Boeing for a very, very long time. Interesting thing, my mother wrote the software that runs on the oxygen recycler on the International Space Station. So she's why the people on the ISS can breathe, which is kind of fucking awesome. But that's neither here nor there. What I want to talk about today is something that I heard someone talking about because they don't understand anything. And I hear a lot of people talk about this. They talk about a wealth tax. You need to have a wealth tax because there are too many wealthy people. And I really need you guys to understand. I want people in general to understand the difference between wealth and money and net worth. Net worth is another thing that comes into it because money is like actual cash that you have. So you could write a check for this. There's a notion in wealthy circles of the millionaire who has $1 million and the cash millionaire who could write a check for $1 million and it wouldn't bounce. Cash millionaires are much less common than millionaires. Lots of people are millionaires. Technically, I'm a millionaire. I own part of this house. This house is worth a lot of money. The property is worth a lot. It's worth several $1 million. My share of this house is worth over $1 million. I couldn't write a check for $10 on it. I could conceivably get a loan. I could get a loan on the equity in the house, but I don't. Regardless, the point here is that the wealth that I have locked up in the equity of this home counts for my net worth and my wealth, but it's not cash. I can't spend it. I can't spend it unless I get a loan on it. And if I get a loan on it, that loan is more wealth. If I were to get a $500,000 loan on my equity in this house, I would have an additional $500,000 in wealth. But my net worth wouldn't change because I owe that $500,000 back to the bank. In fact, my net worth would go down because I would owe the bank not only the $500,000, I would owe them interest on the $500,000. So the thing a lot of people don't get about wealth is that people play fucking games. And one of those games is just loaning each other money in a big circle. If Alice loans Bob $5 million, Alice's wealth doesn't change. Alice's net worth doesn't change. She's still worth the exact same amount. Shuffling that $5 million over to Bob doesn't change her net worth or her wealth at all. It just changes her money. She has $5 million less money. Bob, on the other hand, gains $5 million in money and in wealth. His net worth doesn't change because he owes that $5 million back. If Bob now turned around and loaned the money back to Alice, well, Bob would be paying Alice back. So now everything kind of rewinds and goes back where it was. Bob's net worth doesn't change because his net worth was zero. He had $5 million, but he owed $5 million, and that totaled up to zero. His wealth was $5 million, but now it's nothing because he paid it back. He doesn't have it anymore. But what if you add a third person to the mix? What if you have Alice, Bob, and Cheryl? If Alice loans $5 million to Bob and Bob loans $5 million to Cheryl, well, when Bob loans that $5 million to Cheryl, the same thing happens that happened to Bob. And guess what happens if Cheryl now loans that money to Alice? Cheryl doesn't owe Alice any money. So because Cheryl doesn't owe Alice any money, nobody's net worth has changed. It's still the same as it was, but that $5 million going around the chain has given all three of them an additional $5 million in wealth without changing their net worth, without changing the amount of money that's available, because the $5 million in money came back to Alice where it started. Nothing has changed except wealth, which has gone up by $5 million for each of them, and that's $15 million, which, and this is very, very important to understand, this $15 million in wealth does not exist. It's not real. It's fake. There are other games that you could play like this, and it used to be fairly easy to look very, very wealthy without doing much of anything. You could form a company and you could issue shares of stock. And as the founder of the company, you would issue that stock to yourself to begin with, and you could issue what they called no-par shares, which have a nominal value of zero. And once you had issued yourself all of these no-par shares, you could then give one share of your company to somebody else and buy it from them. If you issued 100,000 shares of common stock at no par, and then you gave one share of that stock to your friend Bob, you could now turn around and say, Bob, I will give you $50 for that one share of stock. Bob gives back the stock, you give him $50, and now the value of each share of stock is $50 because of the last transaction. This is an old method. You can't do this with one share anymore. One share isn't sufficient. You have to make a substantial transfer to cause the share price to change. But it used to be that buying that one share, because it was a legitimate transaction for one share of the stock, that changed the par value of the stock. So suddenly, your 100,000 shares of stock are worth $5 million, and you're a multimillionaire. Not a cash multimillionaire. You can't write a check on this. But you legitimately have $5 million worth of stock that you have manufactured out of thin air by paying a few dollars in filing fees. Well, it's like $150 in filing fees, but that's not a lot to pay to get an apparent wealth of $5 million. Again, this is an old technique. It doesn't work this way anymore. And it doesn't actually count. It doesn't actually change anything. It just makes you look like a big shot without really being one. Your net worth doesn't change. You have $5 million worth of stock, but it's not actually worth anything because your company isn't worth anything. Your stock is supposedly worth money, but not really. It's not really worth money. The way we calculate wealth is in these big chains and these big circles, and that's one of the things that's going on obviously in the AI industry right now. They're just passing money around and they're making companies look like they're successful and look like they're making money when they're not. They're not making shit. They're just shuffling the money around. They're making promises of money that they're not actually exchanging. They're just shuffling numbers around to make things look good. But back to Alice, Bob, and Cheryl and their $15 million in manufactured wealth. When you try to tax that wealth, when you try to tax the $15 million that doesn't exist, Alice, Bob, and Cheryl can make that $15 million disappear with paperwork. You're not going to be able to tax it. It exists on paper, but it doesn't exist in the real world. When you say, we're going to tax it, so on December 31st, at midnight on January 1st, that's when your wealth is calculated, and that's what you have to pay tax on. Well, guess what's going to happen in the month of December? Everybody with massive wealth is going to pay back their debts, and the money's going to shuffle around, and trillions of dollars in debt is just going to disappear. Everybody's going to shuffle the money around. They're going to make all of that wealth go away. And then on January 1st, nobody has any money. Well, imagine that. How did that happen? And suddenly you can't tax it because it doesn't exist. January 2nd, well, now they could shuffle the money around again and everybody's wealth goes back up to where it was. You don't actually change anything. Another thing that bugs me is when people say that billionaires are hoarding money. They're not. They're passing it around constantly. Most of the money that a billionaire, quote unquote, has, they don't. They don't have it. It's money somebody owes them. It's the same kind of thing as those shares of stock that are worth $5 million. You don't have the $5 million. It's theoretical. It's the idea that you could sell those 100,000 shares for $50 each and get $5 million. You can't. Nobody will buy them for that because your company only exists on paper. Your corporation doesn't build anything. It doesn't do anything. It has no facilities, no employees, no intellectual property. It has no purpose. It does not perform a function. And accordingly, it's fucking worthless. On paper, it's worth $5 million. But that's extrapolated from a stock sale that you made yourself to fabricate a $5 million net worth. God, things used to be easy in the 80s. I miss that. I miss when things were easy in the 80s. And I kick myself for being too fucking honest and not just exploiting the hell out of that. I'm a better person for not lying and stealing and cheating to manufacture success. But I'm not a rich one. I do kick myself for that. Did I make the right decision? I don't know. But I made a decision. And it is what it is. Billionaires talk up how much money they have, even when the money doesn't exist. Rich people in general do that. People with only people with a net worth of like 80,000 talk up their wealth and what they own and how much they have. It's like, I own part of this house. This house is supposedly worth millions of dollars. If you really did an appraisal on this house, I would be surprised if it came out worth more than $1.5 million. But the appreciation of the property looks like it's worth several million. And we're always looking at it. Every year we sit there and we look at it and we go, if we have this house appraised, we could dramatically reduce our property tax. But getting the house appraised costs money. It would cost more than just paying the property tax. We would pay money this year and we would save money next year. And we keep going, let's not fucking worry about it. We should, really, but we don't. But yeah, that's been bugging me. You can't tax wealth because wealth isn't real. It's not real money. These people don't have the money. And when you tell them you have to pay taxes on that $15 million, they'll go, oh, fuck. And they'll shuffle the paperwork and go, there is no $15 million. It doesn't exist. And you're not going to get the tax payment that you thought you were going to get. That billionaire tax where you're taxing wealth and you go, we're going to tax all of this wealth so these billionaires have to pay taxes. They're not paying tax on it because the money is not real. It's fake. It's a high score on a game machine. Elon Musk is not worth $1 trillion. That's bullshit. Jeff Bezos doesn't have $300 billion. It's bullshit. He doesn't have the money. It's mostly locked up in Amazon stock. And Amazon stock is worth a lot. Yeah, it really is. And if he sold it all, he would make a lot of money. But not as much as you think. Because when he sold it, the price would start going down. Wealthy people trade on credit most of the time. Now, there are some things that you could do to fix this. There are some things that you could do to change this. And one of them is that when you get a loan, we could call it income. We could say, when you get a loan, that loan is income and you have to pay tax on it. We don't currently do that. This is the big loophole that rich people trade on to avoid having to pay tax. If I hand you $10 million in cash and you immediately turn around and you go, I am investing my $10 million in cash in the stock market, so I will have $10 million in stock. Stock is a tax-deferred investment, and I don't actually have any cash. All I have is stock, and it's tax-deferred. I don't pay any tax on that. I will pay tax when I sell the stock, when I get the money. Because you can't tax money people actually don't have. Now, that $10 million, I gave that $10 million to somebody. Whoever sold me the stock, they got $10 million. So they did something with that $10 million. It gets shuffled around. And the thing is that all the way at the end of the chain, you have the company that the stock is in. That company has the $10 million. That $10 million is in the company. And that company is probably paying tax on it. But in all likelihood, they're using that money to pay their employees. And they don't pay tax on that because they don't have it. They spent it paying their employees. The employees who got paid, they pay the tax. That's how that works. Now, of course, employers do like pay payroll taxes and all that sort of stuff. So they pay some of the tax. But nobody counts that. Nobody counts it. Walmart pays $60 billion a year in compensation to its employees. And they pay payroll taxes on all of that. But everybody just goes, no, that doesn't count. Yeah, it fucking does. It absolutely counts. That's billions of dollars in payroll taxes every year. That counts. Every time I look into Walmart, I expect to find out that they're this evil, nasty, awful company, and they're not. they're actually decent. Like, people sit there and they talk about, hey, Walmart tells their employees how to qualify for government benefits. Yeah, they spend a substantial amount of money tracking what government benefits are available to their employees and producing training materials to tell their employees how to get those benefits that they're entitled to. I mean, they are entitled to the benefits. And people go, why doesn't Walmart pay them enough money that they don't need the benefits? Why don't the people make more money? Why are you blaming Walmart for the people who can only work 20 hours a week? You can only work 20 hours a week? Oh man, you're not going to make enough money doing that. Working 20 hours a week, that's 1,000 hours a year. If you only work 1,000 hours a year and we're paying you $20 an hour, which is it's a good amount of money to make. $20 an hour is good for a second income. Like, assuming you have a partner who makes your primary income, has a real job, making real money. If you're only making $20,000 a year, man, you don't have enough money. If that's your primary income, you're in fucking trouble. Can you go full time? No, you can't go full time? Okay. Here's how to get food stamps. Here's how to get rent assistance. Here's how to get utilities assistance. Do you have anybody in your family who could qualify for disability? Do you have a dependent who qualifies for this credit? Do you have somebody who qualifies for that credit? Do you have somebody who qualifies for this schooling benefit? Here are all of the things you could get from your government to make your life better. I'm sorry, I can't be mad at Walmart for that. I just fucking can't. I cannot be angry at Walmart for educating their workforce on how to get these benefits, because they're not just educating their workforce. Their workforce can go home and pick up the phone and say, hey, Aunt Betty, when I was at work, they told me that there's this program that you can apply for, and it's called this, and you go to this office. Here's a phone number that you could call. I know that you can't work because you're disabled. I know that you're on Social Security disability, but did you know even if you're on Social Security disability, you can apply for supplemental security income? It's not a choice between SSI and SSDI. You can get both. I can't be mad at Walmart for that. They are helping all of these people understand that the government owes them money. That's a good thing. They should teach people that. I just can't be angry about it. You look into it, you go, oh, they pay their CEO so much money. Actually, they don't pay him that much money. Most of his compensation doesn't come in the form of actual cash. It comes in stock. And it's not even stock, it's stock options. So it's like, if the stock is at $1,500 and he has an option at $300, that's like giving him $1,200, but only if he pays the $300. Obviously he does, but then there's vesting and it gets complicated. One of the things a lot of people don't understand is just how much fucking money the rich pay in taxes. They get very bound up in whether Jeff Bezos paid personal income tax. No, he doesn't. He doesn't pay personal income tax. He shuffles his money off to the side into companies. And what he does is, like most wealthy people, I don't know for a fact that Jeff Bezos does this specifically. I don't think he needs to do anything. But what the wealthy specifically will do is they will shuffle their money around within corporations so they personally don't pay any taxes, but the corporations they own do. It's just that when the corporations pay taxes, that doesn't reduce the value of the investment that the rich person has in that company. If I loan $5 million to XYZ Corporation, and XYZ Corporation now has to turn around and pay $1.5 million to the government in taxes. Here you go. Here's your $1.5 million. They only have $3.5 million. But they still owe me $5 million. I still have $5 million in wealth because I loaned it to them and they owe it to me. They don't have it because they had to pay taxes. And if you do that across enough companies, across enough industries, you can get away with, quote unquote, not paying taxes on billions of dollars. But the tax got paid on those billions of dollars. Those billions of dollars aren't real. They're fake. They're a fiction that exists on paper. One of the ways that we get rid of that is through bankruptcy. Bankruptcies cause bad debt to fold and disappear. If I have a wealth of $12 million because I own $10 million of stock in a company, and that company goes, actually, we don't have any money, we're going bankrupt. If they actually don't have any money, there's no money for me to take out of that. That $10 million, gone. Does not exist. Did not exist already. And now that it's actually gone and out of the system, it's not even being counted in my wealth. Sometimes that puts a rich person in a bad situation. If you have, say, your $10 million company, and your $10 million company is fake, you've played games to make it look like it's worth $10 million when it's not, and you've borrowed money on it. Like, say you borrowed $7 million. I got $2 million cash. I got a $10 million company. I borrowed $7 million. That's $19 million. Yeah, look at me with my $19 million. And then the $10 million company admits, actually, we don't have any money. We don't make a product. We don't perform a service. We have no fucking value. We're going to close our doors and disappear. Gone. $10 million of my net worth disappears. $10 million of my wealth disappears. Now I only have $9 million in wealth, and I have $7 million in debt. My net worth is now negative, and whoever loaned me that $7 million is going to be knocking on my door. Excuse me. Can we have our $7 million back? We really need to get our $7 million back. That's fucking important. We really need that. You need to do that. And I'll have to pay it back. In stock, in particular, they call that a margin call. You can buy stock on margin, which is to say that if you have a high enough balance in your trading account, you can buy stock with money you don't have, because the brokerage will just automatically issue you credit up to some multiplier of your account balance. If you have a portfolio that's worth, say, $20 million, it is fairly common for the brokerage house to just go, yeah, you don't even need approval. You can borrow $200 million. You can borrow 10 times your portfolio's value. You can borrow $200 million, no questions asked. We'll just let you have the money as long as you use it to buy stock. And a lot of the time that stock you buy is coming out of the brokerage house's inventory. They have shares of stock. And you go, I would like 1 million shares of that $20 stock over there. In a lot of cases, the brokerage house will have 1 million shares of that stock, and they'll go, no problem, here you go. And it's all just shuffling money around for them. They shuffle the 1 million shares of stock from their account to yours. No actual money changes hands. They just move the numbers in their bookkeeping software. That's all. And because all they're doing is moving numbers, it doesn't cost them anything. It's just accounting. There are no actual trades taking place here. We book it as a trade. We book it as volume on the stock exchange, but it's not. It's not volume on the stock exchange. They're just shuffling money around. They're just shuffling numbers. Now, if the value of your portfolio drops, if you invest in a $20 company that immediately dumps value down to $5, yeah, we're going to need you to pay your margin account off. You're going to have to do that. Oh, well, I can't. And every brokerage house includes this little clause in their usage agreement. Okay, if you buy stock on margin, and they come in and they make a margin call, they can sell any or all of your stock to cover the margin call. In other words, if your stock portfolio is at $20 million and you owe them $12 million and the value of your portfolio drops to $15 million, they'll come knock on your door and say, hey, could you pay us that $12 million now? And if you go, oh, well, I'm not home. Please leave a message. I'll get back to you. They're authorized to sell your stock to get their money back. You've already authorized them to do that. And I say that because so many people logged on to Robinhood and put some money into their account to buy some GameStop stock, and then they bought a whole bunch of stock on margin. And they said, we dropped that stock into a black hole. They'll never get it back. If you owe them money, when they make the margin call, they will sell your stock. When you owe fees, they will sell your stock. As soon as the value of GameStop stock dropped below as soon as it dropped below the replacement value, the brokerage house that ran your account sold enough of your stock to get their money and left you with like 3 shares. So there's $36 floating out there, and you paid for it. Congratulations, big deal. And at some point, they're going to charge you a fee. At some point, they're going to go, hey, you owe us $20. Oh, you don't have any money. You only have 3 shares of this $12 stock. Well, we'll sell 2 shares of it, and we'll let you keep like $4. So you've got like 1 share of $12 stock and $4 balance in your account. And eventually they'll go, hey, you owe us another $20. Oh, you don't have $20. You only have 16 in your account. Well, now your account owes us $4. Nobody fucked Robinhood in the GameStop debacle. Okay? The companies aren't that stupid. And that's the other thing nobody understands is just like wealth multiplies going across, people were upset. They were like, hey, people are shorting GameStop stock. They're shorting more stock than there is. There are like 12 million shares of GameStop being shorted, and there's only 2 million shares of the stock. It's 6 people in a row. It's a chain. And the only thing that matters is that the person all the way at the end of the chain can get the stock and return it before the date comes due. That's the only thing that matters. That's all that counts. And that chain unwinds, and those 12 million shares of stock turn into 10 million, 8 million, 6 million, 4 million, 2 million, 0. it unwinds. People don't understand that about debt. You get little things like you get a circle of people, like it's the whole Alice, Bob, and Cheryl thing, where they all loan each other $5 million and everybody's net worth stayed the same, but everybody's wealth went up by $5 million, $15 million that doesn't exist. It's the same way with shorting stock. Billions of dollars pop into existence that don't exist. And when the stack unwinds, the money goes away again. That's how it works. Anyway, I've been talking about this for over half an hour. Most of you don't care. This is one of those topics that nobody actually gives a shit about, which is why Bernie Sanders can go, wealth tax! Everybody goes, yeah! Nobody understands. Wealth is fake. Wealth is a bullshit number. It's like the high score at an arcade machine. We're going to tax the people on the high score on the Tempest machine at the arcade down at Coney Island. Can't tax people on that. It's not money. Wealth is the same. It's bullshit. It's a high score. It's not real. It doesn't exist. Anyway, do a little YouTube dance. Like, comment, subscribe, all that happy horse shit. And, okay, bye.